Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, coming to you a little before 9 a.m. from the trading floor on this Thursday, October 9th. What's significant about that? That's USDA WASDE crop report day, and it doesn't look like it's going to happen today. It's been suspended indefinitely until the government reopens, and it's my opinion, not something announced by USDA yet, but it's my opinion that if we're in the middle of next week and the government's still in a partial shutdown, that the October WASDE report will be totally canceled, and we'll have to look ahead to the November WASDE report. Um, and that similar thing happened in 2013. Let's hope the government's back open by then. Okay, so I thought I would take a look at supply and demand balance sheets for soybeans and corn, as we've had a significant amount of developments that have been happening here of late. First of all, we had the September 30th stocks report. And for soybeans, there's really no surprise, no significant adjustments needed to be made there. We did see USDA raise their ending stocks estimate to 316 million bushels, relatively minor. We had to make a few adjustments to the balance sheet to get that, but we're basically no big deal compared to some of the other things. So I'm going to jump right to the new crop balance sheet, which is this blue line, blue column we see here in the middle is my estimates. USDA's are here in the goldenrod, and they have not yet been adjusted for those balance sheet changes and some other things that I think USDA would have done in this report today had it happened. But first of all, we have a yield here of 53.9 bushels per acre versus USDA's September estimate of 53.5. Our yield is based on a customer survey. It showed some impressive yields across the Midwest, even in some of the driest areas. Yes, there are some problem areas, but there's also some impressive areas. I remember one farmer reporting that his average went up 20 bushels above his previous record. And so that's a very significant, not obviously not everyone was like that, but you add it all together and it's a good crop. We'll see if that holds into the last half of the soybean harvest, but thus far it is, giving us production of 4.326 billion bushels. We have small imports of 15 million bushels, which is what less than what USDA has at 20 million. Crush, I have at 2.545 billion bushels. That's about 10 million less than USDA has. What I do is I take total crush capacity minus 5% from maintenance. That gives me a 2.545 billion bushels. What that means is as exports fall, we don't have a lot of room to push crush upward beyond this level. And crush is threatened to some downside risk if we don't have clarity on the biofuel program, particularly on the offsets for the small refinery exemptions and the 50% credit rule for imported feedstocks. The EPA still yet to rule on both of those in a comment period, but also doing some work behind the scenes. Well, that work is really suspended with the government shutdown. We hope to have that information here before the end of the year, but it may be the first of the year before we actually get that clarity, and that may trim some off of that crush number. So then we look at exports. Last year we exported 1.881 billion bushels, according to my calculations. I expect USDA to backward adjust last year's exports up to that level. It has new crop exports at 1.685 billion. Not saying anything in its latest report about China not buying. It hasn't bought a bushel yet from us, but it does talk about increased competition, and that's certainly a true perspective as Brazil continues to push production higher and higher and higher. Their cheap currency makes it cheaper to buy from Brazil when those beans are available than it does bring it from the United States. Now their supplies are tighter at the end of the year, and so right now our beans are cheaper than Brazilian beans landed at the port in China, except for the tariffs. Now during Trump 1.0, China needed the beans, so it simply waived the tariffs. It could do so again now. Sinograin, the state grain buying agency, could also buy. It's essentially exempt from those tariffs, but it's not doing so. We have seen a little bit of a push in basis lately, a few cents, and some narrowing of the spreads indicate somebody may be buying soybeans. It, some have speculated it could be China making some good faith purchases ahead of the Trump Xi meeting. I doubt that, because if they were actually making good faith purchases, wouldn't they want that to be public? Want the world to know what they're doing, so to speak, particularly President Trump to know? And it's not so it could be Mexico, it could be a number of different countries making those purchases at a time when our USDA daily flash reporting system is not in effect, and not even our weekly export sales reporting system is in effect. So in essence, as we look, I have our exports at 110 million bushels less than USDA. That brings total use to 4.230 billion bushels, ending stocks to 427 million bushels. Now, it's interesting, the pre-report estimates for today's report from the industry still have ending stocks at 299 million bushels, despite the surplus stocks reported on September 30th, despite the fact that China hasn't bought anything. So does that mean the industry is naive to what's going on? No, they're predicting what USDA will do. They expect USDA to continue to look at this through rose-colored glasses. And there is somewhat of a culture, I believe, within China within USDA to solve for a certain level. And so they probably will try to put off the bad news until they know more, because who knows? Maybe President Trump will get a trade agreement dealing with commodities from President Xi when he meets him in South Korea at the end of this month. And so USDA probably would have kicked the can down the road on cutting exports. Now, in reality, when I look at what China normally would have taken from us to this point, I look at the window that tends to close at the end of January into February for US to sell soybeans or ship soybeans to China, and look at what it's already booked from South America to fill its needs. And I estimate that it's already lost at least 375 million bushels worth of demand from China. So in reality, that export number should already be 1.5 billion bushels, which would push ending stocks over 500 million bushels. Now, I wouldn't expect USDA to do that in today's report if it actually did have today's report, but that's what the risk is. Now, my next column here, I show what if they don't buy any soybeans from us, and I use a generous 1.4 billion bushel export number. The largest amount of non-China business we've ever done before was a little over 1.2 billion bushels. I do believe, though, if China buys everything from South America, they will squeeze some customers out of the South American ports who will come here. And so I'm saying 1.4 billion. That could push ending stocks to 600 million bushels. On the other hand, if he gets a deal for large purchases, and they purchase it simply to build their reserves up, because they won't put Brazilian beans into their reserves, and Argentine production is somewhat undependable. So be kind of a one-time escalation of purchases to build their reserves. And let's say exports go to 1.745 billion. That's still 130 million bushels less than last year. That would drop ending stocks to 257 million bushels, 5.9% stocks to use ratio, and according to historical trends, would justify marketing your average cash price at $12.95. That's a big upward adjustment from where we are today. So you have the potential for a bullish assessment if, in fact, we do get a big trade deal with China. Now, what China has already committed from South America, if you look at what our cash sources have told us, there's about 11 million metric tons, so let's say 400 million bushels worth of demand that they have not filled yet for between now and the end of January. So maybe there's some type of deal where they buy that 400 million bushels from us. That could give us something around that 400 to 450 million bushel ending stocks estimate. There's nothing bullish about that. You need to have more of a blockbuster deal to start turning this thing bullish. Question is, can that happen? Now, that got a little bit more complicated overnight when China up the ante on rare earth minerals. I've talked about rare earth minerals before. Rare earth minerals don't get a lot of discussion because a lot of us don't really understand rare earth minerals. It's not something we're really common with. There's about 17 rare earth minerals that are essential, rare earth minerals and magnets, I should say, that are essential for the production of electronics, everything from cell phones to pickup trucks to aircraft engines to sophisticated radar, but also they're essential for the production of our high-end defense weapons. Now, the latter gets little attention because what country wants to say, China, you need to send us rare earth minerals because we can't produce defense weapons? Nobody wants to show that vulnerability to China, but China is well aware of it. I'm not telling China anything it doesn't already know. It knows that. Now, back in May, the U.S. got an agreement, and China controls 90% of the processed rare earth minerals and magnets in the world. Not 90% of the rare earth minerals and magnets are mined in China, but it processes 90% of them, and many of them are mined in China. Why? Because they're expensive to process and to mine, and they're environmentally dirty. So most countries have just allowed China to do it over the years, and now it has control over 90% of them, and it's been restricting shipment to Western countries, not just the United States, but Western countries. And so back in May, President Trump got an agreement from President Xi to go ahead and ship them to us. Now, industry sources say that that was just a 6-month agreement that runs out in November. And China's only been shipping low and mid grade rare earth minerals and magnets. They can't qualify directly as they are for defense weapons. And it's also requiring a tremendous amount of documentation and pictures, etc., of, in many cases, proprietary manufacturing information to make sure that they're not used in defense weapon production. That also allows China to steal technology on producing these other products, etc. And so that has been the case as we've been going forward, but we still need them. Well, then overnight, and today in China, China added 5 more now to the list of even heavier restrictions, or heavy restrictions. That's 12 out of the 17 now have heavy restrictions on them. And Reuters is reporting that companies producing some of the rare earth minerals and related magnets on the list will need a Chinese export license if the final products contain or is made from Chinese equipment or material, even if no Chinese companies are involved in the transaction. Now, this mimics rules that the United States uses to restrict other countries from exporting semiconductor-related products to China. Dozens of pieces of mining and refining equipment were also added to China's restrictive list. Now, these restrictions are set to take effect November 8th, 2 days before the expiration of our latest agreement, which suspends all the high-level tariffs between the two countries. President Trump recently announced plans to invest dollars into at least 5 mineral mining companies operating in Greenland in the United States, seeking to facilitate the ramping up of production and processing of these rare earth minerals. But all of that takes time to develop. These companies primarily operate in Greenland and in the United States. So it's going to take time. So until then, China continues to hold the trump card, shall we say, over the West and including the United States in dealing with this. Now, I want to briefly go over the corn balance sheet as we go forward. Our latest customer survey lowered our yield to 185.9. I thought it would go lower. It did not. People I talked to indicate they still think yields may come up for the latter half of the harvest. We'll see. Our November survey may show that reduction. But this is what we're going to go with until it does. 185.9 bushels per acre, giving us a crop of 16.7 billion bushels. When you take the carryover, and that carryover got bigger by a couple 100 million bushels on September 30th with the quarterly stocks report. USDA created a problem for themselves by not raising the size of last year's crop. The previous quarterly stocks reports had indicated that USDA had a pretty good handle on the feed and residual usage of corn. but not wanting to raise the size of last year's. Oh, they did raise it 25 million bushels, but they needed to raise it about 200 million bushels. But not wanting to do that, the only option, and we pretty much know what exports are. I have exports for old crop at 2.855 billion bushels, up 25 million from USDA. I have ethanol use for corn of 5.435 billion, which is USDA came to that number in September. I have feed supply, therefore, at 5.468 billion to make it come out to that 1.532 billion that USDA said we ended last year with. So, do you then raise uh, feed supply at 5.468 to 6.1 billion, which is what USDA has for new crop feed usage? That's over a 600 million bushel increase at a time when cattle numbers and hog numbers are both lower. Well, maybe USDA uses that kind of fuzzy math, but that doesn't make sense. So I went with, even with lower cattle numbers, with the Mexican border being closed, even with lower hog numbers, I went with 5.75 billion bushels, which is about a 300 million bushel increase in feed usage because cheap corn does tend to get fed more. Even at that, and I have an extra 100 million bushels for exports, which is really stretching my logic right now. Um, and I have fuel for ethanol at 5.6 billion. That's consistent with what USDA has, but we're not producing ethanol to that pace right now. So a closer number is probably just below 5.5 billion. But for now, I've left it at 5.6. That still takes ending stocks at 2.484 billion. Now, if USDA were to have a crop report today, they are not going to drop it down to 2. Or they're not going to raise it to 2.484 billion. They're simply not going to do it. They're going to try to solve for 2.1 billion, even if they have to keep that feed usage number elevated. So I don't expect USDA to come out with a number like this. And of course they won't today since there's no report, but even in November they're not going to. They're going to hesitate as long as possible, hoping that they can draw that yield number down enough to do it. So how much does it have to come down? Well, I've got two more yield alternatives with the same demand numbers in there, a 183 yield and a 179 yield. So let's look at the 179 yield. Um, if we drop it with those same demand numbers, we then drop ending stocks to 1.865 billion bushels, which is 11.8% stocks to use ratio, justifying a marketing year average cash price of $4.05 a bushel. So that's up better than 50 cents from my current projection of where we're at. So it's a better position overall. But that's assuming that the yield would actually fall that far, and that's a big unknown yet at this point. It is possible it will. I said back in early August that my gut told me that the crop was going to end up at a 182. We'll see where this plays out going forward, but ultimately we're going to go with our customers who are out in the field, who have a good track record on this, and see what they say in our November survey, which I think November 1st comes out on a weekend, so it'll be early the next week that we come out with that survey. So that's our update today in the absence of a crop report, where we stand on the corn and soybean balance sheets and on rare earth minerals, which really have complicated President Trump's ability and desire to be able to push commodities to the front of his negotiations with Xi when he meets him in South Korea at the end of this month. Not saying he can't pull out a deal, but right now it's hard for me to believe that he would do so ahead of the Supreme Court ruling next month on the legalities of the reciprocal tariffs. So we'll see. Anything is possible. That's what's supporting the market right now. Who wants to be short just in case he does get a deal? And of course, we all hope that he does. I hope I'm wrong, and I hope it's a blockbuster deal. But I also want to give you some reality potential so you don't miss out on getting prices you don't like, but it'll be better than what we could end up with going forward. I do think that as we look at corn, the market has already priced in these numbers. And so it's soybeans that I think are more vulnerable right now. Anyway, Be sure to like and subscribe if you want to continue to get these updates from the trading floor. And I'll be back with you as future developments unfold.